Palantir's price is having a slight correction. However, many people still panicked. Was that rally too good to be true? However, Wall Street dropped their signals. And Palantir's new price goal is crazier than today. And here's the exciting part, it might happen soon. Because Karp just dropped massive collaborations no one expected. What is happening? How will all of these make sense? What on earth am I even talking about? Well, let me explain. Disclaimer. Looks like Palantir is taking a little breather today. After soaring to a fresh all-time high of around $106 yesterday, the stock cooled off a bit, dipping about 3%. Naturally, that made some investors a little skeptical. Was that rally too good to last? But if you zoom in, things might not be as shaky as they seem. An analyst pointed out something pretty interesting. Palantir just popped a massive 23% on earnings, which is already a huge move. Since then, it's been holding steady, logging two tight, narrow-range doji candles. Basically a sign that the stock isn't really giving up ground. And even though it was down today, the trading volume was right back to its average since November earnings. Translation? Not a lot of sellers jumping ship. That kind of strength is actually pretty impressive. Instead of crumbling after that big earnings rally, Palantir is standing its ground. But of course, that didn't stop the bears from crawling out of their caves and spreading fear among investors. And, as always, the same old narrative came back. Palantir is overvalued. It's a bubble. It's bound to crash. But in the middle of all that noise, one analyst's take really turned heads. His view? Palantir's latest earnings were almost too good to be true. The company kept bragging about its jaw-dropping rule of 40 score, over 80, which is insanely high. But here's the kicker. Because of its ridiculously high share-based compensation, very little of that cash flow actually turns into net profit for shareholders. And if you listened to the earnings call, you'd know things got interesting. This analyst didn't just question the numbers. He had a problem with the whole vibe. He felt that Palantir's executives, especially Karp, were way too arrogant, shutting down any critics and refusing to entertain tough questions. In his eyes, they weren't just confident. They were straight up dismissive, almost like they were on another planet. Then there's the valuation. Palantir is trading at around 80 times sales. And if history tells us anything, the last time cloud stocks got this inflated, back in 2021, it didn't end well. According to him, it's not a question of if Palantir crashes, but when. However, when you take a step back and look at the bigger picture, all this drama doesn't seem to matter much. While some retail investors get spooked easily and flip bearish at the first sign of trouble, the big players, Wall Street's institutional investors, see things very differently. In fact, some of them are still very bullish on Palantir. Analysts keep tweaking their price targets, adjusting their ratings, and showing confidence in the company's long-term potential. So while the bears are busy calling for a crash, the institutions? They're doubling down. And speaking of Wall Street, Goldman Sachs just made a big move on Palantir. They just doubled their price target, from $41 to $80. Sounds super bullish, right? Well, not exactly. Goldman's analyst Gabriela Borges is still playing it safe with a hold rating, and here's why. She's definitely impressed by Palantir's numbers. 36% year-over-year revenue growth in Q4 is no joke. She also sees more growth coming, especially with how Palantir keeps improving its efficiency and locking in more government contracts. But even with all that, she can't ignore the elephant in the room. Palantir's valuation is through the roof. Right now, Palantir is trading at an enterprise value-to-sales multiple of 55x, which is insanely high for the industry. That's why, despite raising the price target, Borges still sees a potential downside of 21% from current levels. Basically, she likes what Palantir is doing, but she's not convinced the stock price justifies it. And she's not alone. Another top analyst, Michael Lattimore from Northland Securities, also boosted his price target to $80, up from $38. But, like Borges, he's sticking with a hold rating. So where does this leave Palantir? It's in a strange spot. The numbers are undeniably strong, and analysts keep raising their price targets. But at the same time, the valuation is so stretched that even the bullish voices are hesitant to go all in. It's a stock that's both impressing and worrying Wall Street at the same time. A rare and fascinating place to be. But here's where things get really interesting. One analyst just dropped a huge prediction. In an interview, he confidently said that Palantir is heading for $200, and not in some distant future. He believes it'll hit that mark within the next 36 months. His reasoning? I'm not getting off the winning horse right now. That's a bold call, but it speaks to just how much belief some investors have in Palantir's long-term trajectory. While some analysts are hung up on its valuation, others see it as a company that's just getting started. The way they see it, Palantir isn't just another stock. It's a game-changer in AI and data analytics. A company with the kind of tech that could keep pushing boundaries for years to come. So while skeptics are warning about a bubble, the believers are doubling down. And if this $200 prediction turns out to be right, then Palantir's wild ride might just be getting started. But wait, here's the biggest bombshell. Reports just came out that CEO Alex Karp is in Dubai right now. And he's not just there for a casual visit. Something big might be brewing. A potential collaboration, maybe? One analyst put it bluntly, Karp in Dubai? Huge contract incoming? And honestly, that's not far-fetched. Karp just had a high-profile meeting with top UAE officials, including His Highness himself. The whole discussion was about accelerating AI and digital adoption across the UAE, which is exactly in Palantir's wheelhouse. The UAE has been pushing hard to become a global leader in tech and innovation, investing heavily in cutting-edge infrastructure and strategic partnerships. And if there's one company that fits right into that vision, it's Palantir. This isn't just speculation either. Dubai's deputy ruler, Maktoum Mohammed, even tweeted about the meeting, confirming what Karp is up to. He said that the UAE is on a mission to become a top global hub for AI and digital transformation and is actively looking to partner with the best tech companies in the world. This is huge for Palantir, and not just for right now, but for the long-term future. Dubai and the UAE are perfect for Palantir's technology, and here's why. The country is obsessed with AI, data analytics, and digital transformation. Unlike other places where companies have to fight through layers of bureaucracy and slow adoption, the UAE is actively looking for cutting-edge tech to integrate into its infrastructure. They don't just want AI, they're making it a core part of their national strategy. In fact, the UAE has an entire national plan, the National Strategy for Artificial Intelligence 2031, which is all about making the country a global leader in AI. And who better to partner with than Palantir, one of the biggest players in data-driven decision-making. Palantir's software thrives in environments where governments and large organizations need real-time intelligence, predictive analytics, and AI-powered decision-making. That's exactly what the UAE is building. A high-tech, smart city-driven future where AI runs everything from national security and infrastructure to finance and healthcare. On top of that, the UAE is rich, with deep pockets and a huge willingness to invest in the best technology. They're not afraid to spend billions on innovation, especially when it comes to AI, cybersecurity, and big data, all of which Palantir specializes in. So if Palantir lands a major deal here, it won't just be a win. It could be the start of something massive. A long-term partnership with the UAE could cement Palantir's position as a global AI powerhouse, unlock even bigger government contracts, and push the company's stock even higher. This isn't just a random meeting, this could be one of the most important deals in Palantir's history. And if it plays out right, it might just take Palantir to an entirely new level. And it doesn't stop there. Palantir just announced another huge partnership. This time, they're teaming up with Enabled Intelligence, a defense tech startup, to enhance the quality of data needed to train AI models for the Defense Department and intelligence community. Under this new agreement, Palantir's Foundry platform, which is already a big deal in the data analytics space, will now have access to Enabled Intelligence's data labeling services. So, basically, federal agencies using Palantir will be able to request help with labeling their data to improve the accuracy of their custom-built AI models. The goal is to give these agencies access to better, more precise datasets, which will, in turn, help them create more accurate and actionable insights. This partnership is a big deal because it combines Palantir's powerful AI-driven data platform with Enabled Intelligence's speed and expertise in annotating all kinds of data. Satellite imagery, video, audio, text, you name it. They're able to label data much faster than most competitors, which is a massive advantage for government agencies that need this info to train their AI models. Palantir continues to dominate in the defense and intelligence sectors, and with this new partnership, they're just doubling down on their position. It's another example of how Palantir's tech isn't just about data. It's about empowering critical government sectors to make smarter, faster decisions. And as the AI and defense industries keep growing, This kind of partnership positions Palantir even more firmly for massive growth in the future. But what is your opinion on this? Comment down below. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, then turn on the notifications bell on this channel. Missing an important Palantir update might make you lose money, so don't risk it. Also, please share this video with as many people as possible. Let's get this news out there.
What is happening? The whales are waking up. Millions and billions of US dollars are on the move. The excitement is like never before. People are screaming to stop these whales. Their actions got out of control. And this is not a bull market. This is something even bigger than that. But why am I being so excited? What is actually going on? And why today is a truly historic day, not only for Shiba Inu, but for the entire crypto space? Well, let's find out. Disclaimer. Today started with a huge surprise in the crypto world. An early Shiba Inu whale. A dress, which had been inactive for 2.6 years, suddenly reawakened. In just 3 hours, this whale bought over 323 billion Shiba Inu using wrapped Ethereum. This unexpected move caught everyone off guard. Shiba Inu's price had been pretty flat for a while, with not much excitement or major changes. But this whale's activity changed everything. The massive purchase led to a noticeable pump in the price of Shiba Inu. Shiba Inu's price, bringing back excitement to the community. This kind of event is rare, but significant. When a large holder, especially one that's been silent for so long, makes a move, it often sparks interest and speculation. People start wondering what might happen next, and that anticipation can drive up the price and trading volume. But here it gets even crazier. It was actually the blockchain surveillance platform, Spot on Chain, that first noticed the activity from this whale. Interestingly, this address initially received 167 billion Shiba Inu back in April 2021, just 8 months after Shiba Inu was launched. These tokens came from one of the very first whales who got involved with Shiba Inu. Right at the start. This is really important to pay attention to. The fact that this whale is linked to one of the very first big players in Shiba Inu makes it a significant event. Early whales usually have a lot of insight and can influence the market in big ways. So, the fact that this whale connected to one of the very first big players in Shiba Inu is now active again is a big deal. It brings a new level of interest and speculation about what might happen next with Shiba Inu. 3 months after receiving the 167 billion Shiba Inu, this whale staked all the tokens in July 2021. Then, 3 months later, on October 24, 2021, he unstaked them and secured an extra 12.9 million Shiba Inu. On the same day, the whale sold off all 167 billion tokens. It's worth noting that October 2021 was the last bull run for Shiba Inu, with the price hitting an all-time high. So, the sell-off made a lot of sense. The whale cashed out at the peak, taking advantage of the high prices during that period. After those sell-offs, the whale address went quiet and nobody really paid attention to it until now. With the bull market looking ready to take off, this address has suddenly come back to life. Today, at nighttime, the whale made an astonishing 156 transactions, moving millions to billions of Shiba Inu when Spot on Chain first reported it. The whale had bought almost 150 billion Shiba Inu using about 1,000 wrapped Ethereum, which was worth $3.8 million. But the whale didn't stop there. Following the report, He went on to buy another 173 billion Shiba Inu. By the end of this buying spree, the whale had swapped over 2,000 wrapped Ethereum for 323 billion Shiba Inu tokens worth over $8 million, all within 3.8 billion. 3 hours. As of now, the whale hasn't sold or moved any of these tokens. His Shiba Inu balance is currently sitting at 323 billion tokens. This sudden reawakening has certainly grabbed everyone's attention. Interestingly, Shiba Inu is the only major holding in this whale's portfolio. The other assets he has are in very small amounts. It's unclear if the whale will repeat his strategy from 2021, where he staked his Shiba Inu tokens for 3 months before unstaking and selling them. Back 2021, he bought 167 billion Shiba Inu for $600,000 and sold them in October for 5.6.